What's up, everybody? Welcome back to my channel.
Earn it, save it, invest it.
Thank you for stopping by. Thank you for each and every one of you subscribers. Today, I'm going to be going over Hims and Hers really quick over the stock. It's doing exactly what I said it was going to do. And I feel that it's signaling that Hims is going to hit $34. I think it was a week ago, I said, should you buy Hims right now? And I said, if it touches the $34 mark, it's a buy, and I'm going to go over exactly why I think it is a buy at this mark at 34. Doesn't mean you should, but this is why I do believe it is a buy right now, and I'm going to go over the numbers to justify it, as well as going over the stock chart. So if you do like this content, please give it a like and subscribe. I would really appreciate it, and let's get to it. All right, so this is the Hims and Hers summary. Over the last year, you can see it's gained over 145%, which is a lot, but yet you can tell it's been down, just over the last month or so, and the volume has gone up substantially. The PE ratio is 65, which is still high. Even after that significant drop, it's still pretty high, but it is a growth company. And the short interest is 21%, which is essentially there's a lot of people shorting this stock right now. So you just got to be careful of that. The market cap is 9 billion. So it's not a huge company by any means. This is their key financial highlights from their presentation that they did in the last earnings. As you can see, like I said, it's a growth company. They went from making just $1 million. You can see a net income loss or net income or a loss, right? In Q4 2024, to they went from 1 million last year in 2023 to 26 million in 2024. The revenue was 95% year over year increase. So it was 481 million in quarter four. That means it was around like 240 million, right? The year before. The whole year, year over year revenue, or the whole fiscal year revenue is 69% year over year. So again, they are growing substantially with their revenue. Their cash flow, 452% year over year, 322% year over year if you're doing just the whole fiscal year. I mean, they're continuing to up their numbers and grow their numbers. I'm not going to continue, but their subscribers is 2.2 million. This is their market share, right? They're taking a lot of market share. You can see over here 47.5% of the total observed customers, which that is a lot to take, about 50% of the market, right? And total observed total sales is also 50%, 47.3%, right? So Hims and Hers is taking up a lot of the market right now. Right now, you can see also that their weight loss drug, is lower than every other competitor in terms of price. Right, Hims and Hers is 1,900, just about $2,000, while everyone is at least 10% higher: 2,200, 2,800, 3,200, 4,500. So not only is their product a little cheaper, and that helps, um, for their sales, for them to be able to make the sales, but it also leaves room for them to increase their price. So that means they're able to, up it. They can increase their price by 10%, and they'll still be the lowest costing um, manufacturer for this drug, right? Or not manufacturer, a company that's selling this drug, right? So they could up their price 10% and still be the lowest. This is their weight loss drug. It's their biggest drug. They think it's going to be 225 million, or it did 225 million in revenue 2024. I believe they said it's going to be over 500 or 700 million in 2025. As you can see, over the last years from 2020 all the way to 2024, they've added a lot to the different products they've had. So they had only two in 2020, and now they're up to five. Um, so they're increasing all their products as well. This is their five categories that they are servicing. and they believe that they're going to have over $100 million at least in each one of these. The weight loss is, like I believe I said, 500 to 700 million. Revenue growth, continuing to grow the revenue over and over, year over year, and quarter after quarter, right? Revenue. This is their subscribers, and then this is their revenue. The subscribers on the left, it's continuing to go up and up, and just about 2 years, it went from 1.2 million to 2.2 million, right? Their revenue, this is one thing that I really loved about their revenue, is that it was continuing to go up throughout these quarters, and yet how much they were actually charging per subscriber, how much revenue they were getting per subscriber, stayed about the same. So you can see, as they started to charge more per subscriber, as they will be able to do, like I said, they have room, their revenue is going to increase substantially, even more and more, because they're able to charge the subscribers more money. So the new customers compared to the repeat, right? Obviously, new customers that come in and try their products and, maybe try it for a month, 3 months, 6 months, that's where they're getting the meat of their revenue. But they are continuing to grow their repeat customers, right? They're able to hold on to them and retain them. So that, and you can see that in the fiscal year of 2024, they retained almost the total amount of 2023, right? The whole, in all 2024, the amount of repeat customers that were there was more than what they had in total of 2022. So they're increasing. Like you can see, a bunch of new customers came in 2024. Well, that means, how many of those are actually going to come in and repeat, right? Be repeat customers. And that's just going to continue to grow as well. Just a few other numbers. They finally have turned profitable. They flipped to profitability in 2024, which is amazing in terms of trying to pick a stock. I believe, a company can be losing money and you can still want to invest in it. It doesn't mean it's a bad investment exactly, but once it turns into profit, then you start really kind of playing with it in a different manner. You kind of feel a little bit safer, right? If it's a company that's really making money and making a profit. So right here, as you can see, they were losing 107 million in 2021, up to making 126 million in profit in 2024. Cash flow continuing to increase over the years. Again, cash flow increasing. You can see the free cash flow 2021, negative 39 million to now 198 million. That's a big increase. The revenue in all fiscal year of 2025, they believe is going to be 2.3 to 2.4 billion. And they made 1.8 in 2024. So it's a 56% increase. And they believe that their margin is going to be about 12 to 13%. So you can see over here on the right, 85% long-term retention, which is the amount of people that they really want to keep on. As you can see, they didn't keep 85%, but they're keeping on, I believe, between 70 and 75. And the weight loss revenue of at least 725 million. There we go, 725. I was wrong. I said 500 to 700. It was over 700. So they're expecting 725 million just from the weight loss, right? And they said at least 100 million from all the other ones. But if they're expecting 2.3 to 2.4 billion in revenue, and the weight loss is just 725, you still have another 1.7 billion to, between those other 4 departments. Here we go, just one of their long-term goals, 2030. Won't really get into that right now, but I will go into the stock right now. If you haven't already, go ahead and hit the like button, please. It does a lot. I'm trying to grow my channel. If you like what you're hearing so far, please hit the like button and the subscribe button. I'm trying to produce a little bit more stuff here, go over some stocks that I believe will be productive for people to kind of look at, not to essentially invest in. I'm not going to tell anyone where to put their money, but I will just like to bring up information that's good to listen to, hear about, and kind of put your mind to it, and then you can make your own decision. So Hims stock, as you can see, has gone through a lot of ups and downs, right? The other week, I made a full 40-minute video about HIMS, which was pretty lengthy, but I went over the whole business, the whole earnings report, and went over the stock, went over my own personal holdings, which I don't hold much. I had a put option as it was starting to really drop down. I sold that put option, and it was expired a week ago anyway. So yeah, I have very little shares right now. I hold 22 shares, but I plan to add to my position, and I don't know exactly how much I plan, but I'm definitely now really starting to consider adding to the position. And the reason is because last week I called it. I said that HIMS has to go down to 34. Okay, I didn't say it has to. I said I believe that it will drop to $34, the $34 to $33 mark. And the reason why I believe that is because I drew out all of these things, right? And what I went through is ever since it bottomed, right? I looked at the top, right? I looked at where it topped off, right? And then where it bottomed, right? Now, as you can see, right? So here we have another one, right? We're at the top of the mountain, and when we drop to the bottom, you can see we're under this green line. Every green line is a top, right? It's a top. As you can see, when this one drops, every drop is under a top, right? See this drop? Under a top. This drop, under a top. This drop, under the top. And then I said, well, what do you think is going to happen with this drop? It's probably going to go under this top. This top, I have it at 34.65. And where are we right now? 34.39. Dang, right? That was exactly what I said it was going to do. So I believe HIMS is a buy right now. I believe it's going to continue to go up. Now, it doesn't mean it's going to continue to rocket ship in the way it has been. It is a volatile stock. If you look at the seasonality, which I'll pull it up really quick, as you can see with the seasonality, right, this is how much it's gone up and down throughout the months and throughout the years, right? Since 2019, since its IPO, you can see that it is volatile stock. It's going up multiple per double digits, right? We have 52, 29, 25, 30, 23, 22, 55. I mean, the amount that it goes up in a month can drastically change. I mean, the difference, the spread, it could be 100%, right? You can have plus 50% or minus 50%. You just don't know. It's a new company, right? IPO is in 2019. But they are leading the charge. They're leading the way. In my opinion, they're like the Netflix of medicine, right? That's what they're kind of coming off as, like the subscription way. They're taking up so much of the market share. Now, 50% is nothing near what Netflix was starting to take up in the beginning. But again, it's just like they're taking up a lot of market share. They're growing at a significant rate. There's no reason why they should be going down 50% like that. I mean, obviously they were the $70 per stock, like that was definitely too high. But I believe at 34, the reason why I believe 34 is also a buy. It doesn't mean that it's necessarily what it's valued today. When I think, oh yeah, that's what it. Yeah, $34, or what was the market cap? 9 billion, right? Yeah, that's what it's worth. I mean, the stock market's always looking ahead of time. So really, I still think, oh, maybe it's a little bit too much, but I don't see it going down much from here. It could go to 30. It could go to 30. It could drop another 10, 15%. It definitely could, but I just don't see it going under 30 anymore unless we have a very big, significant crash in the whole stock market. But I do think HIMS is going to continue to kind of bounce around these levels, the mid 30s for a little bit, then maybe kind of jump up to the 40s, and then maybe find its way up to the 50s and 60s eventually. Again, it's a volatile stock, so it's going to go from the 40s to the 30s, then into the 40s, and then back to, it's going to jump a lot. But when you look at the stock, right, it's a profitable company. It's a very it's a growing company, right? It's a fast growing company. It's a profitable company. And the stock is kind of, no, I wouldn't say it's beaten down. It is in no way beaten down, right? over just the last 1 year. What was it? Over 100, yeah, 139%, right? At one point, it was at 374%. So again, I have some shares. I have 22 shares. I believe they're at like $20. So it's not much. My put option that I actually was able to profit off of, if I use that money towards my actual shares, if you want to mentally put it that way, my shares are now only worth. I bought them at like the price was $10, right? Because I made like $300 off my put. So again, I do think Hims is a buy. Don't take, you don't have to take my advice, just take my information and make an educated decision based on what you think is right for yourself. But Hims, I said it's going to hit 34. That's what I believed in, and now it's hitting, it's going under that top, right? When the drop is under the top, right? And it can break its pattern. It does not mean it's going to do this forever. I'm sure plenty of stocks have done this exact same pattern and then broke it off and then did something else, right? Just never went under the top, right? And then they found, you just never know. But this is my opinion. And I think a lot of people would be making a good choice if they bought it. And I'm going to. I'm actually going to. I'm not just going to tell you that this is probably a good option to buy it, and then I don't put my money on it or do anything like that. No, I'll put my money where my mouth is. I'm going to buy some now. Granted, 20 shares at like 20. That was like $400 at the time. I wanted to buy a lot more. I accidentally bought 100 and then I sold 90 back because I wanted to build on that position, and then I just didn't build on it. Then I built on it a little bit late. I hit the 20 and I messed up. I definitely messed up on what I wanted to do, but now I'm going to get into it now of where I believe it is a good endpoint right now. So $34, I think it's a buy for Hims. Check it out. So that was it for today. Again, give it a like and subscribe if you like this stuff. I'm just trying to grow this channel. I'm trying to get a community of people who want to earn it, save, and invest it. I myself, I'm just a parent. I'm in my mid 30s and I have 2 kids, and I try to teach them all the time to earn it, save, and invest it. Tell them every single night, earn it, save, and invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounding interest. Just to get this stuff in their minds, right? My son, I have a stock. I got him one piece of Roblox, and they have another piece of Nike, and little things right here to get them going, right? To get them into it. And I do have another video about generational wealth or how to make $1 million. So I'm going to make another one that's a little bit better production value, but it's going to be geared toward parents, right? As parents, it's on us, right? You hear that term generational wealth. And a lot of the times you see these multi-billionaires and they say, I'm not leaving my kids a bunch of money. Generational wealth isn't all like just a stack of cash. It's, it's knowledge, right? And getting them to understand the value of certain things. So my children, they have an account right now. They have a Roth IRA, invest a little bit every month, and we're just building on it very slowly. I teach them. And I think that's the real generational wealth is the knowledge and then the money as well, right? You have a little bit of money. And if us as parents, we start our kids this young, right? My kids are young. I have about to be 10-year-old and a 6-year-old. And if when they grow up to be adults, right, and they have this account that has all this money that's grown, and they're able to live a life a little bit more free, a little bit better, and then they're able, as they're growing up, they're able to invest in their kids, right? And they're, maybe nephews and nieces and stuff. And I have my niece building a Roth IRA, and it's like, it's great to have that kind of building. And if we can just build it slowly, that way we have less worries throughout when we get older. Like on the path that my kids are taking and my niece is taking, they're going to be millionaires. By the time they're 65. Now, people are like, oh my God, like the 65, that's so long. Like you live for today. The investment isn't that much, right? Investing $10 a month, $25 a month, that's it. It's about time, being longevity, right? You start them with a little bit of decent chunk in cash in the very beginning, and then you just let it ride. You invest a little bit every month. You invest smartly, invest in the index, invest in smart, bigger companies, profitable companies, quality companies. So that's kind of my rant a little bit, but that's what kind of community I want to build. Is just some people who want to talk about this stuff, want to go over different kinds of stocks, but not just for like day trading and stuff like that, like long-term investment. Now I know HIMS is a volatile stock and it's seen as like a trader type of stock. Um, I'm not going to see it as that. I do think HIMS is going to be a long-term play. I think they're going to be a long-term player in the game. So I'm going to invest in the long term, but I'm looking at the stock and when it goes up and down. Like just recently, I bought a little bit of Meta. I bought a stock, just one piece, because I'm seeing how it's dropping right now. It's between 10-15%. I'm like, hey, I'll take the drop. If you give it to me, I'll take it. So it just depends on where you're at in life, what your risk tolerance is, what your intentions are. You're trying to day trade, you're trying to invest long term and just not even touch it. There's so many different ways to do it. But yeah, I'm a long term trader, or I'm a long term investor. I am not a trader, and I have traded before, and I made some money, lost some money, and there's a lot that I learned. But most of this channel is going to be based on the long-term view of things. Again, something like this is kind of short-term in the sense of, hey, if you get in now, I think now is the time, around this time, right? But it's to help set you up for the long term. So anyway, that's my thing. Hope you liked it. Again, give it a like and subscribe if you did. And never forget to
Earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.